Welcome to Bears in Exile. Today is Wednesday, June 22nd, and it is time for the market overview. We'll be looking at the Dow, SPX, VIX, XOI, TNA, UUP, FXE, GLD, and SLV. And as is typical, we will start off with the Dow. We had mentioned yesterday that it was time for a sideways or down move because you can't just race back up to the top. And sure enough, we did get a nice red bar today. And I had mentioned in the daily running thread that we were really looking for it not to go past the halfway mark of yesterday's candle. Unfortunately, it did. On a positive note, it did not go all the way past the candle, but regardless, it would have been much better had it closed above the halfway point. That also puts us below these two candles back here. Not exactly an optimal setup. Beyond that, we have the stochastic very high. We have the RSI still trying to figure out what to do with itself and if it wants to get above the 50. And we still have the bullish MACD crossover. However, we also... actually, that's it. I was looking a little too close there. Anyways, so this is a very mixed picture, and certainly it could have been worse, but it also could have been much better. If we look at the SPX, it is the same thing, except that we closed right at the halfway point. Maybe it's a tiny hair below, but that is much better. However, it is below all of these four candles now. So once again, could have been worse, could have been a lot better. It just needed a little bit higher, and that would have been fantastic. But it is what it is. Secondaries are the same as the Dow, so I won't go over that again. The short-term moving averages, this put a little damper on them. The likelihood that this is going to get a full crossover and separation prior to entering the bar is less because the momentum has been taken out of this. So that is a bit of a concern for me. On the VIX, we are right in the middle between the two Bollinger Bands, so it does have room to move in either direction. We did end with a hammer today, so you know, whether or not it's going to pop back up remains to be seen. The secondaries would say that that is less likely, but still we do have a hammer, something to be aware of. XOI, of course, got a reverse hammer, so it does, you know, when we have a bullish crossover of the MACD, that is wonderful, so long as it can get all the way up to the zero and get through it. And of course, it doesn't have to do that. It can cross back over negative, just like it did over here. Bullish crossover did not get up to the zero, recrossed over. So we have to be aware of that. There is no guarantee that this is just going to continue on its merry way up, and that you know, the bear counterattack may not be over. Whether it will be ultimately successful or not remains to be seen, but that is what it is. TNA, reverse hammer, also suggesting possible further down movement. And secondaries are just like the Dow and the SPX. So I mean, what are we going to get that's going to tell us something really useful? Well, for that, we would come over here to UUP, and we said yesterday how we didn't know if it was going to fall back down now that it had been rejected from the bar, or turn into a flat line and sit on the bar. Well, for the moment, it is sitting on the bar. We have a hammer. Certainly, it is possible that it will go back up into the bar and try to do further damage. Should it do that, of course, the market will not like that. On the secondaries on UUP, we have the RSI pointing up, the MACD pointing up, and stochastic pointing down. It's a very mixed bag, and it is very much a wait and see. But with all of the other inverse hammers, and now on the dollar being a hammer, of course, all being manipulated by the NDE of Bernanke's speech and the uncertainty that it is bringing forward, it is entirely possible that the dollar will go up, and it doesn't have that far to go. I mean, the upper limit of this is somewhere around 21.65. So if it wants to go back up there and let the market figure out that it's not the end of the world, that's fine. To confirm this, we're going to look at FXE, the euro. We have an inverse hammer suggesting down movement, and the bar is still here. It is not very powerful, but if it wants to go into it, challenge it again, damage it some more, certainly it can do so. Secondaries are all mixed. And GLD indecision candle, however, it did move up today. We are about to get a bullish crossover, and if the dollar is indeed going to go down, then this should go up, and certainly it is lined up to do so. And SLV still essentially a double flat line. I do not like it. It has not decided what it's going to do with itself, and should be avoided. So really that's about it. There isn't too much to say tonight. We need more data. And Bernanke's speech, we need to wait and see how much damage it's going to do. Had he came out and soothed the market, that would have been much more positive. Instead, he raised more questions than answers, and that is a bad thing. So we shall have to see. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.